ownership rates among every generation have still not rebounded from the 2008 Great Recession. The rate of home ownership among Americans of all ages still hasn't rebounded to pre-recession rates, according to new data. Baby boomers, or those aged 65 and older, are doing the best, bouncing back to within 2 percentage points of 2006 levels, according to a new report from the U.S. Census Bureau. About 79% of people in that age range owned a home in 2017, compared to roughly 81% in 2006. Millennials and Generation X have not fared so well, with those age groups still owning homes at rates of 7 and 10 percentage points below 2006 levels, respectively. In 2016, roughly 35% of people aged 35 and younger owned homes compared to about 42% in 2006. For people aged 35-44, the 2017 rate was 59%, compared to 69% in 2006. Beyond generational differences, there are still sharp racial divides on home ownership in America, with about 72% of white people owning homes in 2017, compared to 46% of Hispanic people and about 42% of black people. Beyond the obvious disparity, black people have not rebounded from the Great Recession as well as white and Hispanic people, who are each still about 4 percentage points below 2006 home ownership rates. By comparison, Black Americans are still about 6 percentage points below 2006 levels. Overall, 2017 the American home ownership rate was about 64%, still 5 percentage points shy of the 69% achieved before the economy began its rapid spiral in late 2007. Unsurprisingly, millennials were the least likely group to own property, and while home ownership rates often vary based on the economy, interest rates and the housing market, other factors can affect younger generations, according to the census report. Those include the cost of education, along with the burden of student and credit card debt and the fact that more young people are putting off marriage. Americans think that the ideal age people should marry is 25, but only about a quarter of adults have actually done so by that age, said demographer Jonathan Vespa, of the U.S. Census Bureau. Because marriage is closely tied with establishing their own household, young adults may be delaying home ownership to later ages as well. The news is consistent with another report, issued in May, that found that millennials born in the 1980s may never financially rebound from the Great Recession. The study, by the Federal Reserve Bank of St. Louis, found that the net worth of an average family headed by someone born in the 1980s remained 34% below expectations in 2016, the most recent year for which data is available. By comparison, people born in the 1970s were 18% below their expected benchmark, and people born in the 1960s were 11% behind. Those born in the 1980s are at substantial risk of accumulating less wealth over their lifespans than the members of previous generations, the study said. The average family led by people born in the 1980s and 1970s are expected to have higher debt burdens at any given age than all other generations studied, and that debt is less likely to be from a mortgage and more likely to be from student loans, auto loans and credit card debt.